Hello and welcome to Deal Flow, the show that tracks merger and acquisition activity in Africa and beyond. I'm Esther Ubudaga. We'll be updating you every week on all the big deals, the threats and the hostile takeovers, and the lesser-known transactions, the world of investment banking, corporate takeovers, and private equity deals on your screen. But this week, we'll be discussing Rand Merchant Bank's report, Where to Invest in Africa, a guide to corporate investment. And later on in the show, we'll find out from Michael Mack, the CEO of the world's largest maker of crop chemicals, Syngenta, their M&A strategy across emerging markets. But first, let's take a look at our deals of the week. The GSE-listed freight logistics company Gingrod has acquired a 20% shareholding in NWK. Now, NWK is an operating company that trades in agricultural and agri-related products, resources and services. BlackBerry is still on the market. Shares in BlackBerry fell more than 6% recently on doubt about a $4.7 billion US bid to take the smartphone maker private, and after a big US carrier said it would stop stocking BlackBerry smartphones in its stores. Global online commerce giant eBay plans to buy payment firm Braintree in an $800 million cash acquisition aimed at expanding the mobile transactions handled by PayPal, the eBay-owned online payment system. In Rand Merchant Bank's third annual Where to Invest in Africa, a guide to corporate investment, Africa continues to show an improvement in its attractiveness as a destination. In the studio with me to flesh out this report, I have Nima Ramkilawan-Bana, Africa analyst at Rand Merchant Bank. Thank you so much, Nima, for joining us.
Thank you.
Now, Nigeria moved into second place from third last year. Did that come as a surprise?
It was actually quite expected, I think, especially if we look at how Egypt has done over the past year, but particularly if we look at forecasted growth rates for Nigeria. Still slightly below trend, but above 6%, market size growing. In fact, in the next 2 years, we wouldn't be surprised if Nigeria starts to challenge South Africa for that #1 spot.
Okay, well, let's go into the methodology you used. Market size, economic growth, depending on GDP forecast over the next 5 years, and operating environment index. Now, for market size for Nigeria, what were your findings?
Well, we take the economic size, and what we look at particularly is purchasing power parity terms, so US dollar billion size in PPP. We want to compare like with like, so remove the exchange rate effect. At the moment, Nigeria is about 2/3 the size of South Africa in terms of economic value. But that well could increase over the next 2 years given the rebasing exercise that Nigeria is undertaking at the moment. So it has been delayed continuously. We now have word that it might be at the end of the first quarter next year. But if we take Ghana as a benchmark and look at how much their GDP increased, 40 to 60%. So Nigeria could well surpass South Africa in terms of economic size. Yes, merely an accounting exercise, but still for reputational purposes, to be the largest economy on the continent is quite favorable for investment. But that's just merely one of the inputs into the methodology.
Now, for Nigeria, if we're talking about GDP growth, remember that sometime this year or before the end of the year, we're actually going to see a rebasing of the Nigerian GDP. So yes. Are we talking about growth in real terms? Because from our statistics office, if that is done, we could be looking at numbers that say that the Nigerian economy is actually bigger than that of the SA in real terms.
Exactly. So that exactly speaks to that market size component. With regards to the market growth rates, what we actually do is take a forecasted growth rates for the next 6 years, and that's based on the IMF forecasts. As I say, that has been in around trend growth of around 7%, but we know that the structure of the economy is changing. Non-oil growth is the impetus for expansion in the economy, but the oil sector continues to wane, and we see that in the second quarter numbers, perhaps even the third quarter, based on production output statistics. Still though, if we compare Nigeria's growth rates to that of South Africa, which is largely stagnated, it continues to leapfrog it in terms of the macroeconomic statistics.
Okay, let's look at the other methodologies that you use. Operating environment index, well, I imagine Nigeria didn't exactly score high in that.
No, not particularly.
But do you see this changing in anytime soon?
I think it's largely a function of the pace of structural reforms, particularly in Nigeria. It's not something that is going to change overnight. It's embedded infrastructure constraints within the economy, access to financing, corruption, bureaucracy. It's these types of challenges that continue to be identified not only in Nigeria but across the continent as the most challenging factors for doing business. And I feel that only once these aspects start to become easier will we start to see a change in the international surveys that we've used as part of our methodology and to elevate Nigeria's scoring in this regard.
Now, looking at your report, it also says that looking at last year, what we had last year, and what we're seeing this year, it hasn't it hasn't exactly been any major changes. We saw Ghana moving, we saw Nigeria moving from third to second place. Why do you think this list is we're not recording any significant movements?
Well, if we had to look back at the scoring, as we say, we amalgamate both macroeconomic fundamentals and overlay it with your operating environment. So that's basically the ease of doing business. The ease of doing business doesn't necessarily change. It's based on perceptions. So we've been asked a number of times, why does Egypt as well as Libya still feature within the top 10, given the political uncertainty that we've seen in the north of Africa? And what we say is that those are merely pillars within the operating environment indices, and the effect is somewhat diluted. If we were to take a similar occurrence, for example, in Thailand, which happened a couple of years ago, and look at how their operating environment scoring changed, it was actually quite marginal. So we applied the same type of change to Egypt and found that its position would only actually drop 3 to 4 places should there be major changes in perception. So we've seen shifts in our top 10, but not necessarily surprising that those continue to dominate given the large market sizes, given the expeditious growth rates, and the fact that on average the operating environments are moderate to good.
Okay, so could we be looking at more FDI, foreign direct investment, coming into Africa as a whole, but perhaps for this top 10 or maybe top 3 in the next year?
Well, if we had to just take a mergers and acquisitions activity over the last year, we actually saw an 18% increase. And the primary countries that we look at is South Africa and Nigeria. Particularly if we look at the type of investment, it's still being channeled very much into your resources industries, energies and materials, power, for example. We see the type of investment changing as the markets start to become more sophisticated, as the demographic change becomes more entrenched, and we see more consumer-facing businesses into Africa. So we continue to see an increase in your FDI over the next couple of years. It's going to be gradual at first, but pick up pace, as I say, as the nature of your economic structures change.
Now, even though we're expecting robust numbers, a good outlook, as you have pointed out, in the next year, 2 years, we're looking at more activities in the political front. We have 2015 elections and a lot of concerns surrounding that election. We're looking at higher fiscal spending. Monetary authorities are still keeping a tight monetary stance. Are investors keeping that in mind?
I think absolutely. Those are cyclical events if we have to look at it. Keep in mind that the methodology we used is to inform long-term investment decision making. But definitely we are bearish on the Nigerian outlook over the next 18 months. Granted, all the factors that you've given are still in play. The political uncertainty that we might well see before the 2015 elections, fiscal slippage that could feed into your currency and cause a more rapid pace of depreciation. But we've seen that the central bank, even today, in terms of their changes to the foreign exchange market and what they've done to reintroduce your retail auction system as opposed to your wholesale auction system, they're taking very proactive measures to try and limit the fallout that may occur. If we had to look at your macroeconomic fundamentals, yes, growth is on a slippery path if we look at its composition, but we still believe above 6% for the next 2 to 3 years, which is quite competitive compared to the rest of Africa. In terms of inflation, we know it's quite sticky in Nigeria, structurally high, but still probably going to fluctuate between 8.5% and 9.5% in the long term.
Well, thank you so much, Nima Ramkelana-Bama. We're going to have to leave it there. Thank you so much for sharing your thoughts with us. Well, Bronwyn Nielsen recently caught up with Michael Mag, CEO of Syngenta, to discuss the company's M&A strategy and how they plan to expand the organization's footprint in emerging markets.
Let's talk about your Africa aspirations as Syngenta. I believe you are investing some $500 million into the African continent, and you want to grow that into a significant business.
Well, I mean, today we do have a significant business, $250 million of revenue here in the whole continent of Africa. And here
you want to see it to $1 billion,
to $1 billion, so it's a multiple of 4, and we think this is eminently achievable. We've already started just a couple months ago with an announcement of an acquisition of MRI Seed, a white corn seed company in Zambia. Just this week over to Namibia, where Syngenta was granted observer status for the UNCCD, and we're engaging governments and stakeholders all around the continent. A lot of opportunity here.
Your strategy must be centered around the fact that 60% of the world's arable land lies on the African continent. That's got to be at the heart of your strategy.
Well, the heart of the strategy here in Africa is quite simply that the productivity of African farms is not very high, and depending on the crop, depending on the country, you're looking at 1.5 metric tons a hectare. You go to more places around the world that access to know-how and tools and technology are more available. It's not uncommon to have 10 metric tons a hectare. So the opportunity for productivity improvements are multiples of 3 or 4 depending on where you are. So that's the big opportunity.
That's a wrap of this edition of Deal Flow. Until next time, it's goodbye.